Hello everyone, this is Ahura and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 35 in 2025. As always, let's first check what we had previous week and then go forward and check the week ahead as well. Previous week, it was a very busy week, especially with the uh, Jackson Hole Symposium started on Friday. We're going to have it on Saturday. We had on Saturday and Friday. Market paid too much attention on Friday's Mr. Powell's speech, where he mentioned about the possible rate cut. He mentioned about it was in his probably last speech that he had, last speech and last report he had in Jackson Hole. He talked too much about what happened in the previous years. We know that he gave the Federal Reserve also gave the new 5 years economic plan, and especially focusing on a labor market. After his speech and talking about the economic data, what market take as the result, it was that the Federal Reserve is more dovish right now. So this more dovish helped the stock market to increase, especially the Dow Jones printing a new record high, while US dollar got slightly more under pressure and helped the gold as well to print a new weekly record and go towards its all-time high. Generally, the data on the data front, generally previous week we had somehow the good data, especially on especially on S&P Global PMI numbers. Developed economies mostly they had a better manufacturing PMI, manufacturing activities, and the service sectors overall it was less than previous months or less than expected. But generally, the previous service sector was not that much good. But on the other hand, manufacturing sector had an amazing performance in most economies, especially in the United States. On the labor market, US initial jobless claims increased to 235K, while the market was expecting around 226K. Suggests that the labor market is getting slightly more under pressure, especially knowing that the new hiring also slightly weakening. So you have to wait and see what's going to happen in August NFP numbers, which is going to be published at the first week of September. Later, the other data that we had from other economies, especially from the China, especially from the Japan and United Kingdom, that confirmed or Canada, that confirmed that the inflation mostly is again increasing. Generally, that's the overall, even in China that we have a negative inflation in previous months, or even in Japan that inflation fell from 3.3% to 3.1%. Still, the data shows that inflation is still could be the concern in the market, and it's still like underlying data on the underlying inflation is slightly increasing. That's what happened previous week, and now let's go. On the previous week, it mentioned that the Chinese central bank held the interest rate at 3% for 1 year and 3.5% for 5 years loan prime rate, while in New Zealand, central bank cut the rates by 25 basis point from 3.25% to 3% following weaker economic growth and slowing inflation. In the week ahead, central banks, we have no central bank meeting, but in the United States, we're going to have a very busy week, while in other economies, we don't have too much data to watch. For example, in Germany, we'll have the IFO and GfK numbers. In United, both supposed to be weaker still. In Eurozone, we're going to have consumer confidence and economic sentiment. Again, we don't expect any positive data from Eurozone economies. In Eurozone, that's what we have. In Japan, we're going to have the Tokyo inflation number and retail trade or retail sales. We expect to see the inflation slightly in Tokyo to fall from 2.9% to 2.5%, and for headline and unemployment stay unchanged at 2.50%. That's what we're going to have in other economies, but unemployment rate in Germany is supposed to stay unchanged at 6.3%, if I don't mistake, right? 6.3% unemployment rate in Germany is what we are expecting to see. In Canada, we expect to see the GDP growing by 0.1% in June, and after 0.1% falling in May. In June, expected to see slightly better economic growth. However, the focus will be on Friday's US data where we will have the personal income and spending numbers. We expect to see United States or US citizens to spend slightly more money in July, with the spending increasing by 0.5% after 0.3% increase in previous month, while their income also increased slightly from 0.3% its growth is going to be seen at 0.4%. So and personal income and spend while the personal income and spending increasing, the inflation, core inflation, and personal consumer expectations price index supposed to increase by 0.2% monthly, and core consumer inflation also increased by 0.3%. Oh, no, sorry. Both of them expected, CPI and PC and core PC, both expected to increase by 0.3% monthly. On the annual scale, PC price index supposed to stay unchanged at 2.6%, but the core PC price probably can fall to 2.7% from previous 2.8%. That's what we're expecting to see. The other data that from United States, like we're gonna have the pending home sales, new home sales, consumer spending for the second quarter, and the GDP for the second quarter. We don't expect to see any surprise for the second quarter's data. Initial claims for unemployment benefits should be around 235, 36K, same number that we had previous week after increasing from 225K requests. Generally, the data from the United States can show more mixed confidence, mixed condition, and that's why to understand the dollar index movement and the stock markets movement, we have to we better watch the Fed speakers, because the data is showing the mixed data, but this mixed data actually at the same time could be could be read as it is as a signal of the more cautious policies before Federal Reserve to make another decision. That's why we still counting on the 75% till 80% chance for 25 basis point rate cut. Actually, I think it's on almost 100% expected to see that we expect to see the 25 basis point rate cut. As a result, this uncertainty and the swings that we have in the market can support the idea of an uncertainty in the tradings as well. That's why the dollar index should be again continue its side movement between 96 and 98. That's what we expect to see, especially between 97 and 98. This is side movement for the dollar index. This is most probably going to happen in the next week as well. But sorry, but at the same time, the bulls going to have slightly more demand. On the stock markets, this slightly more dovish policies on the stock markets can support the bulls, but at the same time, price taking can be another reason to be more cautious, because now we are in a very high levels. There are some analysts that believe that the stocks, especially the tech stocks, they are somehow the overpriced. That's why the profit taking, especially in the Dow Jones, especially in the Dow Jones, which after printing new record high, and Nasdaq, and S&P 500, the take profit or booking profit or saving the profits could be one of the technical ideas that can support the correction in a week ahead. But generally, we are still positive. I mean, there is nothing to say that the market can change its direction, but still we are the positive. The market still can think about the forward going, but as mentioned, there is a risk of correction because of mostly because of profit taking. The Friday's personal income spending data or the personal inflation numbers could be the main market driver to see what we can have it. Generally, the August somehow is a positive for the stock markets, while the September are not such a good month. That's why usually in September we see around 1% fall around the stock markets. As for energy, WTI, we know that the data that shows that the US inventory fell by more than 6 million barrels previous week. That was one of the reasons to support the oil price and holding it back from more falling. But generally, the EIA and IEA for 2026, they expect to see less demand for the oil, or somehow they can say they say that we have more than 2.5 million barrels more export and more output than the market demand. So that's why I'm not too much positive about the energy market, about the oil market for now. Still the side movement, but if we have any good progress, any good news from the Putin, Trump, and Zelensky talk, that can put the pressure on the energy market. As that, if we have any progress and a positive news from there, it means that the Russian oil also can get back to the market and put the pressure on the oil price. Price is not going to be too much positive, but the negative should be more cautious. But still, the positive is less. We have the for the price grow and a positive data, we have less chance. As for the gold still overall uptrend can continue. Holding 3,275 can put the bulls in the game, can hold the bulls in the game, and we are moving towards 3,450, and uptrend is still continues. As for the Bitcoin and the cryptocurrencies, there is nothing still to say that they're under pressure. The Bitcoin and generally the cryptocurrencies, with the overall good and positive news and updates from the SEC and from the US government, still they are taking advantage of it. Weaker US dollar also support the oil Bitcoin price. Generally, we expect to see still this uptrend side movement with a slightly uptrend tendency can continue between 110,000 and 120,000. It's the side movement that we expect to see for the week ahead. Yeah, that was what happened previous week and what we expect to see in the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.